Did you know that Tesla stock is down more than 19% in December so far and roughly 55% year to date? The automaker's share price recently dropped to its lowest level in more than 2 years, with no sign that it is coming up anytime soon. But rather than get scared, a lot of investors are putting in more money into Tesla shares. Even famous investment YouTuber Chicken Genius Singapore has recently bought about $300,000 Tesla shares despite the recurrent dip in the stock price. Probably, this is a buying opportunity that you should not miss. Hello everyone and welcome back to Tesla Tomorrow. Tesla stock has not been performing so well in the past months. But it seems like the more the stock price continues to drop, the more some investors continue to buy the shares. Chicken Genius, who is a huge fan of the stock market, recently loaded up more Tesla shares. And the stock investor isn't the only one who has taken advantage of the current dip in Tesla's stock price. Even long-term investors like Cathie Wood and George Soros have also added significant numbers of Tesla shares to their portfolio. Cathie Wood recently bought a sizable chunk of Tesla shares after the stock dropped to its lowest level in more than 2 years. Wood is a longtime Tesla bull who has previously referred to Musk as RX Renaissance Man. She remains unshaken in her conviction that Tesla is well-positioned for a massive surge in its stock price in the future. What more does Cathie Wood have to say about Tesla? Let's find out. Before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. In a recent interview, the ARK founder and CEO said she was not concerned about Musk's leadership at Tesla. She also added that Musk's main role at Tesla right now is moving the car company towards an autonomous taxi platform, which she believes will happen in 2024. Wood is a strong believer in Tesla and sees the automaker retaining its position as the leading EV company in the world. ARK Invest, Wood's investment management firm, loaded up about 74,862 Tesla shares across 3 of her exchange-traded funds. The purchase was valued around $11.7 million, based on the stock's closing price at the time, which was around $156.80. And it comes after Musk reportedly sold approximately 21,995,000 shares of the company, or roughly $3.6 billion worth of Tesla shares during the 3-day period ending on the 14th of December. Wood has been buying Tesla shares amidst the dip, and this dip buying spree comes during a difficult month and year for Tesla, as investors worry that Musk has diverted his attention away from Tesla to manage Twitter. Earlier this year, Cathie Wood scooped up a combined 132,213 Tesla shares, which represented a stake worth about $32 million based on the stock's closing price at the time. The transaction came a day after Tesla released its third-quarter deliveries, a record of 343,000 vehicles, up from 241,300 a year ago. Although several analysts were quite skeptical about the automaker's performance, seeing that it had fallen short of analysts' expectations of 365,000 deliveries in Q3, ARK Invest still seemed to have remained bullish on the car company. Likewise, in October, the ARK Invest CEO disclosed via the flagship ARK Innovation ETF that she had bought 66,190 Tesla shares. The purchase was valued at approximately $13.7 billion based on Tesla's closing price at the time. While Wood admits that all stocks are experiencing difficulties as the market tries to understand how far the Fed will go and how deep the recession will be, she, however, noted Tesla's competence to scale through the tough times. Wood noted that innovation will help solve the problems with supply chain issues as well as the food and energy crisis. Do you agree with this? Share your thoughts in the comment section below. According to Wood, there's been an accelerated consumer preference towards electric vehicles like Tesla because of the spike in oil prices. And she believes that the trend isn't stopping anytime soon. She further stated that while there is a problem with oil prices, she thinks that Tesla is a solution to the problem. After her recent purchase, the stock investor cited the need for Tesla to cut down costs to boost its sales. She claimed that going by the recent concerns about Tesla's demand, the car company can vastly increase its sales by cutting the cost to make EVs by 50%. She also added that Tesla could expand its addressable market tenfold by cutting the cost of an electric vehicle in half. With electric car prices reduced, Tesla will make its cars more affordable and increase revenue in the long term. Wood pointed to loosening supply chains that place Tesla at the forefront of being able to drive down costs and prices to help bring electric vehicles to the mass market. ARK's recent Tesla buy comprised 61,537 shares for the ARK Innovation Fund, 10,066 for the ARK Autonomous Tech and Robotics ETF, and 3,259 for the ARK Next Generation Internet ETF. Cathie Wood is not the only one who is bullish on Tesla. Leading global investment banking, securities, and investment management firm Goldman Sachs also remains confident in the company's long-term delivery prospects. Although the firm recently dealt another blow to Tesla earlier this week when it slashed its price target and lowered estimates on Tesla deliveries and gross margins for the fourth quarter, it still maintained its buy rating and is bullish over the long term. Warren Buffett and Charlie Munger are two other stock investors that have good things to say about Tesla in these uncertain moments. Berkshire Hathaway, the American holding company owned by these two stock investors, recently sold almost 6 million shares of China EV giant BYD for about $145.38 million. And there are numerous reasons to believe that these funds may be directed to buying Tesla shares. Warren Buffett had previously been bearish on Tesla, but only recently changed his opinion about the car company. Likewise, Charlie Munger has also recently said nice things about Tesla and its CEO Elon Musk after being negative about the car company in February of this year. Berkshire Hathaway Vice Chairman Charlie Munger recently spoke highly of Musk's electric vehicle company Tesla, calling it an amazing feat in the American auto industry. Munger stated that he is surprised that Tesla has performed so well, further reiterating the automaker's strong stance in the EV business. According to the investment expert, Tesla has made real contributions to civilization, and Elon Musk, its CEO, has done some good things that others couldn't do. He further cited that there hasn't been a successful new auto company in a long time, describing what Tesla has done in the car business as a minor miracle. In a recent statement by Warren Buffett, he reiterated his strategy for investing in a stock, stating that he does not buy or sell shares based on what the market or the economy is going to do. According to a recent regulatory filing, Chairman of Soros Fund Management George Soros has also taken advantage of the drop this year and loaded up on Tesla shares, tripling his stake in the past months. Unlike several investors who have sold and are still selling their stocks for fear of losing out, George Soros has bought even more Tesla shares, increasing his holding by a significant amount. Tesla has been doing quite well despite the economic drawbacks that it has faced since the year began. And so, there are more reasons to believe that it will perform even better in the future despite its low-price stock. The company is significantly ramping up production across its factories and is making efforts to meet up with demand. According to recent news, Tesla has concluded an agreement with the state of Nuevo Leon to build a new factory west of the city of Santa Catarina. Musk had previously said that Tesla plans to keep building more factories in order to meet its goal of production of 20 million per year by 2030. In October, the Tesla CEO made a visit to San Pedro Garza Garcia and Monterrey, and now sources have claimed that the visit will start to yield positive results very soon. The source stated the investment will be finalized in the coming weeks, and after the end of the year, it will be announced. The commitment is that it must be completed immediately after the start of 2023. We know that it will generate employment and it will be located in the only area available, which is the west of that municipality. Also, in a recent post by Morningstar, it stated that at current prices, it views Tesla shares as undervalued. And with no company-specific news other than Musk's stock sales, it sees no reason to change its Tesla forecast, and as such, maintains a $250 fair value estimate and narrow moat rating. What about you? Are you also taking advantage of the current dip in Tesla stock, or are you selling every bit of your Tesla shares? Let us know in the comments section. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there!